Should long-term dividend investors focus on buying into dividend-paying stocks and ETFs that offer massive dividend growth historically, or should they get right to the point and invest into different dividend-paying ETFs and stocks that offer a much higher dividend yield from the start? Well, in this video, I'm going to share with you exactly my thoughts and my strategy when it comes to the age-old question, is it better to invest into higher yielding assets or dividend-paying stocks and ETFs that offer much more dividend growth historically? So if you want the answer to this question and you want to hear my thoughts, make sure to stick around, drop a like down below, and let's get right into it. Real quick, for those that haven't already, make sure to go to the first link in my description and grab my new dividend investing ebook, where I share exactly how I went from $0 invested to now earning over $6,000 on a monthly basis and over $1 million invested in the markets. Along with the ebook, you're also going to receive my custom dividend tracker, where you can track your dividend progress on an ongoing basis and reach your dividend investing goals. So make sure to grab yourself a copy of my dividend investing ebook and the new dividend tracker today. It's the first link in my description. So first of all, let's lay down some groundwork. What exactly are we even talking about here? Well, we're talking about whether or not it could be possibly better to invest into something like SCHD, for example, a dividend-paying ETF that offers around a 3.5% starting or trailing 12-month dividend yield, but historically has paid more and more in dividends over time. To give you a look at the max time frame as far as dividend payouts, you can see that it's pretty obvious that this ETF has paid investors more and more cash flow consistently over the years. Or for dividend-focused investors, is it better to invest into something like JEPQ, for example, a covered call income style ETF that offers a trailing 12-month dividend yield of around 9.73%, but because of the ETF strategy, historically at least, this ETF has not only not paid more and more income over time, but during certain times historically it's even paid less. Now, it's honestly a really good question because an ETF like SCHG that offers around 3.5% trailing 12-month dividend yield compared to something like JEPQ, which is offering almost 3 times as much initial cash flow from the start. That's a really good question, especially for newer investors. It seems like it'd be obvious if, of course, you're looking for income generation, if you're looking to get paid as much in dividends as possible. It seems like the obvious answer would be JEPQ because, of course, it's offering almost 3 times as much in dividend income. But something like JEPQ that's paid more and more historically, especially for a relatively younger investor, with that massive dividend growth rate built in, this ETF's income, although not the largest off the bat, could also in fact make cash flow investors much richer long term. Now, before we again seek to answer this question, let's just go over some more of the basics, some of the things that are common when it comes to both these different style ETFs. Now, because JEPQ once again is a covered call style ETF, this ETF is not going to necessarily have all that much upside. Although over the past few years, JEPQ, unlike a lot of other covered call style ETFs, has traded up into the right nicely, and this is of course due to a few specific reasons, but mostly because the way the market and the underlying has traded during this time frame. Now, lower yielding dividend growth style ETFs like SCHD, although they don't offer as much cash flow from the first day you invest into it necessarily, over time ETFs like this have grown a lot more consistently, which has not only made investors a nice amount of money as far as cash flow from dividends, but also on top of that price return, which has been great. So just as a general statement, and of course there can be exclusions in this, but for the most part, when you invest into an ETF or stock for that matter that's going to pay you north of 8 or 9%, a lot of times there isn't going to be as much upside as far as price return that comes along with it. But on the other hand, when you're investing into dividend growth style ETFs that hold a basket of holdings that not only have the potential to pay more and more in dividends over time, but also historically have went up in price, you're probably going to have exposure to more upside along with dividends and dividend growth over time. Now, funny enough, if we were looking at total return from JEPQ and SCHD, and this is over the last 2.25 years, so keep in mind, this is not all that much data to go off of, but over the last 2.25 years, with a $10,000 investment into both JEPQ and SCHD, JEPQ would have had a total return of around 25.98%, and this is with dividends reinvested, keep in mind, where SCHD would have had a total return of around 11.44%, or an average annual around 10% for JEPQ and 4.9% for SCHD. So even though SCHD historically has grown in price and also paid more and more in dividends over time, over that specific time frame comparing SCHD to JEPQ, although it's not all that long because again this ETF is relatively new, this ETF has outperformed the dividend growth king SCHD. Now this brings me into my answer on whether or not it's better to invest into higher yielding things like JEPQ or dividend growth names like SCHD. The answer is, for one, it's going to depend on your specific strategy, what you're really looking to solve for. But for those investors out there that want the biggest, largest total return possible, the answer is going to be, if you are going to invest into higher yielding options that offer a 9 or 10% starting yield, well then it's probably best to invest into the highest quality ones across the board, or the higher yielding stocks and ETFs that at least have a track record to show for. Now what I mean by this is that there's tons of different covered income style ETFs across the markets, but in my opinion, JEPQ, for example, is one of the best across the board for many reasons we've talked about in previous videos. Now that's exactly why in this video specifically, I wanted to compare JEPQ to that of SCHD because again, they both offer positive total returns. Neither one of them are bad whatsoever, and honestly, they both are probably the highest class within their specific verticals. For income generation from day one, JEPQ, the JP Morgan Nasdaq Equity Premium Income ETF, has done a great job of achieving this for investors. And as far as dividend growth over time, SCHD has paid investors almost 11% more or less, more in dividends year after year after year. So if you're an investor that wants more cash flow from day one, that's completely fine. You can still make a lot of money by doing so, but make sure to find the highest quality income-oriented ETFs across the market because they are not all created equal. And the same thing goes for dividend growth style ETFs and stocks across the market. If you're looking to earn more and more in dividend income over time consistently, find ETFs or stocks that at least historically have done so and have an outlook and strategy that most likely will continue to do so in the future. So the real answer of whether or not it's better to invest for growth or for high yield from day one, my personal strategy involves both. I invest in tons of different stocks and ETFs across the market, as you can see right here, and some of the names in my portfolio offer an initial starting high yield, like JEPQ for example, EPD, which is Enterprise Product Partners, and then there's other stocks in this portfolio that don't necessarily offer a high starting yield, but have offered massive growth historically as well as dividend growth. And throughout my portfolio, I have a nice mix, at least I would like to think that I have a nice mix of different dividend paying stocks and ETFs that offer a little bit of everything. But my main strategy, at least my main personal strategy, is to invest into things that I think are high quality and that pay dividends from day one, either a high starting yield or offer a lot of dividend growth historically. Now, every single name in this portfolio doesn't necessarily offer that, and that's because like all of us, my portfolio is far from perfect, but over time, I'm trying to mold my portfolio into the perfect high yield / high dividend growth rate portfolio that's going to pay me a ton of dividend income consistently, but also is going to pay me more and more over time and grow my net worth on top of that. So is dividend growth more important? Is high yield more important? Either one can definitely solve for whatever you're looking for, depending on if you're looking for higher dividend income from day one or more dividends long term. But regardless, I think even more important, it matters about what you're invested into because again, not all high dividend growth or high yielding assets are created equal. So if you're looking to invest into assets that offer high yield or high dividend growth rate, make sure they're the highest quality and they fit exactly what you're looking for specifically. Now, the beauty of dividend investing is if you can find the few times in history that you can buy into a high quality dividend stock at a very low price, you can of course lock in a very high starting dividend yield, and with dividend increases over time, you're able to pretty much ride along with the dividend stock into the future and get paid massive cash flow along the way. So now that we went over my thoughts when it comes to either high yield or high dividend growth rate historically and my specific strategy surrounding it, I lastly, most importantly, want to hear from you guys down below. Are you personally, as of right now, buying into higher yield or higher dividend growth rate ETFs and stocks across the markets, or a little bit of both like me? Let us know in the comments down below. If you enjoyed this video, make sure to please drop a like and subscribe for more future content like this. Thanks as always for stopping by, and if you are interested in investing, make sure to check out these recent videos I posted right here.